We'll get more on the NAB results. We're working with Claire Xiao, the research analyst at Blackmore Capital, who's standing by. Claire, great to go and see you there. How did it go?
Hi.
The markets voted negatively at this point in time. What did you make of the results, first of all?
Thanks, David. Thanks for having me today. So I think overall, today's NAB's result are pretty strong, solid. It's just based on the earnings growth, on the cash earnings growth, and also on the dividend being kind of like a small beat to the consensus. We think overall it's in line with the expectation, with cash earnings in line with expectation consensus, and also dividend in line, and also the pre-provision operating profit also kind of in line with our expectation. But what we are thinking in terms of what we are kind of want to focus a bit more will be on in the future of the FY23 business loan growth, because that is a key differentiator for NAB, and that is why it is trading at a premium to Westpac and also ANZ. So we're thinking that still remains quite challenged in FY23, and that has also been highlighted by the NAB CEO as well. So we're thinking we're quite conscious in that sense on that credit growth, and also in the housing market growth. We've seen that housing price coming down, and also the owner-occupier and also the investor home loan on the new loan commitments also coming down based on the October number. So what we like about in NAB is it still remains a very high quality banks, but at the moment we just remain quite cautious on our weighting on the financials and also the banking sector in general. However, what we're thinking about NAB is that it's having a very good discipline in its cost control. So the cost to income ratio further reduced to around 46%, and also expected to decline further in FY23. So we think that comparing with other banks, that's been quite positive, and also the volume growth in across the whole categories have been strong. Apart from the business lending side, that's only grew by 0.9 times of the system growth, which is kind of highlighted why NAB is losing a bit of a market share in the business lending side, and also the future maybe post a more uncertain outlook in terms of the business credit growth.
Claire, let's unpack that business lending side of the equation. It's been very strong. We've seen the RBA figures that have come out at the end of each month. The aggregate financing figures from the business sector have been very strong, north of 14% year-on-year growth. Who is gunning for NAB's share? Because it's got that reputation from the past of being the business bank. Who's coming for that territory? Yeah,
of course. So we've all observed a very strong growth, as you have mentioned, about that 14% in the past 12 months of the business credit growth. And also we've seen, even though the business confidence coming down, based on the November data that's just released by NAB, but we still see that business conditions still remained pretty strong, still well above pre-pandemic level. So at the moment, we've still seen that very strong business conditions and credit growth. However, that credit growth is mainly coming from the larger enterprises. So NAB have a large market shares in the SME market, and is a leading market position in the SME market. However, we've seen that in terms of the business credit growth, for the medium-sized enterprises, the growth is modest. For the smaller size business, the credit growth rate is actually going a bit backwards. So that's also part of the reason why we're seeing that the future financial conditions might pose a greater threat on the SME credit growth side. And at the same time, we've seen CBA also had a very strong growth in the business lending side. So I think overall, we still think NAB having that very strong market leading position in the SME market, and that remains to be a key differentiator for NAB. It's just that based on the outlook and maybe the market conditions going forward into FY23 or 2023, that we see that probably coming a bit more challenge.
A lot of investors get in the banks for the dividends. So when it comes to payout ratios, and a lot goes into what might go and be paid out in the future, what are your expectations around the National Australia Bank moving forward?
Yeah, so the dividend payout ratio, we think for the banks in general in Australia, they had moved back into a very sustainable level at the moment, around 65 to 75% based on the cash earnings. Previously, it was around 85 to 90% of the dividend payout ratio, which we think is not sustainable comparing with global peers. Now we're seeing that coming back to $1.51 in FY22. That's a full year dividend payout, slightly above consensus of the $1.50. That translated into 68% of the dividend payout ratio, which we think are very sustainable. And they are targeted a dividend payout range around 65 to 70 or 75%. So we think going forward, we think that is very strong, very sustainable, which we expect to see still a very attractive dividend yield of 4.9% for NAB. So I think the dividend payout for this year has been in line with expectations, slightly a small beat. And I think going forward FY23, I really hope they can maintain that payout level that we think are pretty good.